Moon gang. Hello. I hope everyone had a amazing weekend. Good morning. Today is Monday, September 20th. I think this summer is almost over and we're heading officially from I guess a lunar standpoint or whatever that standpoint is, whoever makes up the seasons, feels like we're heading into the fall. Well, anyway, I hope you had a great weekend. I truly drew. I hope your fantasy footballs did better than mine. I hope your hometown professional football teams did better than mine. We're waking up to a pretty rough market. I am not here in any way to sugarcoat what is going on. If you looked up and if you woke up this morning, you kind of cleaned your eyes out. You're like, oh, I wonder how the stock market's doing today. And you opened it up and you looked at AMC and GME. You're probably like, whoa, these numbers don't seem right. And then who knows, maybe you hit them with a,
oh, brother, it's going to be one of those Mondays.
Could be. And then there's a chance you probably looked over and you saw what was going on in the Russell 2000. You're like, oh man, that's down by 2.5%. The S&P 500 is down by 1.6%. The NASDAQ 100 is down by 1.8%. This is the action we're seeing in AMC and GME right now. AMC is down 6% in pre-market. GME is down 4%. It is tied to the overall market. This is 100%. This is not an AMC GME specific type of a thing. This is the market is going haywire. So for this morning, I do want to kind of dive what's going on with the market, and there's a good chance that my update video tonight does not relate to AMC and GME. It will tangentially, but more so relates to hey, there's a lot of questions of what's happening. I see more people talking about this negative beta. I'll also touch on that. But really, this all started with Evergrande. So what you guys need to know about Evergrande, and like I said, I will have a standalone video on this. Evergrande is a big real estate development company within China. It's a big company, and it is a company that has quite a bit of debt. We're talking about $300 billion with a B, and it's a huge conglomerate, financial conglomerate of a real estate company. I believe it can represent up to 15-20% of the, I believe I read 15 to 20% of the nation's GDP. It's insane. It's ties, and that's why a lot of people are calling it the equivalent of the Lehman Brothers event here. We're just one giant company gets caught, gets hit, and it's not a good situation. So let's dive into some facts and figures. All right. Overall, this is for the South, because even crypto's getting hit. This is Bitcoin trading at 43,000, Ethereum trading at 3,000, Cardano trading at $2, and Hex trading at 40 cents. So before we get into these facts and figures, I do want to start all of this off by reminding everyone, be greedy when others are fearful. Be fearful when others are greedy. With this, I want to see how the stock market opens, but I do believe that there is an additional sell-off ahead of us. I don't think we've seen the bottom quite yet, but this is the time where you have your extra capital that we've been working to develop with BBIG, ANY, SBRT. These are the exact moments that we work on developing extra capital. So when we see the red light discount sale going on in some of our favorite names and tickers, that's your opportunity to buy. You don't buy when things are ripping. You buy when things are dipping. If you like it, why would you not want to buy it on a discount? And right here, we're getting what, in my opinion, obviously I'm not a financial advisor. I'm not a lawyer. I'm not really anything. I'm not a fortune teller. I have winning trades. I have losing trades. I'm not even one of these guys that can kick it all off and say, hey, turn this amount into this amount. Hey, I'm here for stock market commentary. I'm here just to hang out with all of you and talk about what's going on and see if we could come to some better understanding of a true situation and get a better idea of how we can or maybe don't want to do things. But right now, in my own opinion, and this is in no way for anyone to copy, I see weakness. I think we're going to still have a bit of weakness. And eventually, I think this will lead to one of the best buying opportunities we've had in quite a while. I like shopping on discount. I don't like shopping when things are being overpriced. And right now, as you can see from some of these charts, starting to look like a bit of a discount, especially in the overall market. So now let's dive into some of the things that is causing the market to go down. The first one is definitely Evergrande, but there are some other things we need to know about. Investors fear a contagion sweeping financial markets from the troubled China property market. Hong Kong equities saw a big sell-off during the Asia trading session on Monday. The benchmark Hang Seng Index plunged 4% with embattled developer China Evergrande Group on the brink of default. So this stock just had its most recent close, and it was the lowest it's ever closed. This stock has dropped more than 90%. I think it's gone from like $20 down to $2. It already had debt of $300 billion. I think there's a holiday going on in China right now, and their debt is coming due, and they've basically said all these messages, we don't have the money to pay our debt. It is not good. Huge company, no money, big ties, big debt, big situation. I would not be surprised. I don't know. This is the exact same bullshit that we saw in 2008. It really is. We have these guys that they just think they're that, this is the saying for the people from Enron, who was like a whole nother debacle. They just think they're so smart. They think they know exactly what's going on. They don't think anything's going to mess with them. And they don't know what they're like. The one thing that I've learned in my own recent insanity in my life of the past 6 months of now that I've gotten here, and as you go a little bit higher in social media, you start to get connections and you start talking to people. And as you're more and more interconnected, the amount of conversations I've had now with people that are higher up in Wall Street that I would have never had connection to. What's weird, and to a lot of you that maybe have lived more life than I have at this point, maybe this is like, oh, okay, yeah, like we know that, but maybe this will make sense to the people younger than me or at my age, or maybe it'll just reaffirm some people that you knew this, but you didn't necessarily I guess have it confirmed in a certain sense. It is scary some of the power levels people have in this world when they still don't know shit about what they're talking about. There are many, many people, and you see it on all scales. I don't know if it's your company or your local government, the world government, these business leaders. There are a lot of people, not all of them, a lot of people who have way too high of a position, way too much power, that do not know what they're doing. They got there simply because they were there. They were there at the right time. They put enough time into their company. They, for whatever reason, won a special political battle, whatever, it doesn't matter. But there are a lot of people, and I know this is not surprising to many of you, but I just want to inform you that, now with me, I always assumed it, and now I just see it firsthand. There are people with a lot of money and power who don't know what they're talking about, but they don't really know that themselves. They feel as if because they have money and power that they did something exceptional and right in this world, and they think that they know more, and that's where we kind of come into this entire ideology of elitism. And it happened at Enron. It happened at Long-Term Capital. It happened at Lehman Brothers. It's all these people that they think they know better. And what's frustrating about it, and I don't want to think about it too much because it's just going to piss me off to no end. Evergrande, the entire situation of how this came, it's going to be the same as 2008, folks. No one's going to get in trouble. If anything, one person is going to make a huge killing off of it. The other people are going to lose their jobs. Someone's going to get bonuses, and they're going to get back. They're going to, I would assume, I don't know. Some people don't think that the state party will save them. I don't see how they don't, but no one's going to get in trouble. No one's, all the investors in Evergrande at this point, if they haven't gotten out, I don't think it's done. I think this company will go to zero. The investors got screwed. The board members, the leadership probably didn't get screwed. That's how this goes. This goes in the world that when you're running, the person who should get in trouble never ends up getting in trouble in situations like this. Maybe I'm being pessimistic. I think I'm being realistic because I've never seen a pattern that differed in this overall situation. But who knows? Maybe this is the time that the person who deserves to lose money and deserves to get in trouble and deserves to get investigated, for us to dive into how did someone take such a situation, leverage it up, that one real estate company in a country that's not even the US has an impact on the entire global economy. To me, that's not a safe, secure system of it just doesn't add up. And no one's ever going to argue to me that like, oh, no, it's good that no, that's stupid. Why would anyone ever argue that? To me, this is still just simply representative of the situation that there's too much inherent risk of the way things are tied. And with this risk, it doesn't seem like any regulators are doing anything to try to like button it down. Maybe it's too slow moving. Maybe I just don't have enough patience. But with this, obviously this is Evergrande. I would not be surprised if regulations, at least from the US, start getting turned up on companies that we have ADSs with, such as Alibaba, Neo. I haven't done it yet, but there's a very, very high chance that I take my Neo investment because I am a fan of the EV sector. There's a good chance that I take my Neo investment and switch over to a US company just because like I don't want to take on additional risk because no one knows what the not only financial but political fallout will be between the US and China in this deal. So right now, I'm pretty hesitant about my Chinese-based investments such as Neo, JD, Alibaba. I might be looking for a new home for those. But anyway, so Evergrande, you need to know about that. Huge real estate company, tanking, dragging a lot with it. On top of that, the Federal Reserve is beginning a 2-day meeting Tuesday, and investors are worried that the central bank will signal it's ready to start pulling away monetary stimulus amid surging inflation, improvement in the job market. Before this Evergrande thing, I would have been like, okay, yeah, that makes sense. Don't quite believe that they're going to do that right now. The market hates unknown risks. It hates uncertainty. And right now we have multiple things going on. We have the Evergrande situation. We have the Federal Reserve. We have basically some continued talks, of course, about COVID. COVID cases begin because of the Delta variant remain at January levels as colder weather approaches. So right off the bat, we have 3 uncertainties. And really, the market doesn't even like one major uncertainty, as in you're putting in the Federal Reserve and COVID. That's why things are down right now. People are going risk off. Risk off means basically they're just switching it over to cash. And I think people are trying to become cash heavy right now, capital heavy. They're worried about their own liquidity levels because they're looking to shop on this discount. I think a lot of people are pulling out very close to relative highs. They're waiting to see how bad this gets. When it shows a little bit sign of cooling off and the momentum turning back around, I think we're just going to see all the capital that's being pulled out get ejected right back into the market. So for me, I don't look at this like I can sit here, I can empathize, sympathize with all of you. It sucks when you see all this red. But I truly believe, and who knows, it might happen as early as today. It might take a couple weeks. I don't know. That's like, you have to kind of pay attention to the market to see what's going on there. But I very, very much believe this scenario that we're seeing right now, September, maybe it bleeds over into October. I truly believe we're about to see a great buying opportunity. And hey, if you're more of an active trader and you're trying to make money playing it both ways, I mean, good luck. I think you could crush it. I mean, you can make money on the upside, downside, and also when it's doing nothing. So if you're trying to make some quick intermediate trades just to build up your capital, hey, it's the same thing as I'm always going to tell you. Mind your risk, pay attention to reward, and don't be changing your trading plan like partway through the trade. On top of that, we have some seasonal weaknesses. September has the worst track record of any month, averaging a 0.4% decline according to Stock Trader's Almanac. I talked about this in my update video yesterday. Seasonally, the second half of September is very, very weak. So we're fighting against the Evergrande blow up, the Federal Reserve, COVID, and seasonal weakness. Investors are also concerned about brinkmanship in D.C. as the deadline to raise the debt ceiling approaches. Congress returned to Washington from recess, rushing to pass funding bills to avoid a government shutdown. Maybe I don't know enough about the government and recess and taking breaks and weekends, but like, seriously, what the fuck? Like, are you kidding me? Taking a recess or breaks? Like, our debt ceiling, like, figure it out. This is what we elect them to do. All of them, like, this, they get paid so much. What is it? The lower levels now are getting $175,000. Do your job. Don't go on recess. Don't take a break. This concept that they're running the U.S. government, which is so incredibly important to the global government. Do your job. Like, this concept, I don't know how long the recess is, and this concept that they could be like shut down. All right, do it. This is what we elect you to do. We don't elect you to like just screw off and like, oh, we're taking this break. We need this vacation. I got to go hang out with my, like, you're an elected government official. Figure it out. I don't know enough about it, but hey, I'm not a political official. This is what I elect them to do. I elect them to figure out these problems for me. That's their job. I do my job. I sit in front of a camera and I yell at it in my basement all day. And if an elected official wants to come here and listen to me, I'm here. I do my job. I elect them. They should do their job. This isn't a surprise. It's not like they got to September and they're like, I didn't know about this, like, this debt ceiling thing coming off in October. Like, don't they have some sort of like a secretary or something to be like, hey guys, this is coming up next month, kind of a big deal. Maybe we shouldn't be pushing it to like 1 or 2 weeks before, guys. Like, I don't, this is in no way a surprise. They knew it was coming. Figure it out. Like, give yourself a little bit of leeway. Like, I don't know. This concept of them trying to push everything to the last second to get anything figured out, man, it's frustrating. Man, it is so frustrating. You know, what I don't get about any of this is if you did this at your job, if I did this at my previous jobs, you know, you get like fired. Like, that's the craziest part, is if I underperformed this horribly, they're like, hey, yeah, like, okay, let me put it this way. Let's say you work out whatever your company is and you know this entire thing. Like, you have a big project coming up in October. Huge project coming up in October. And you know about it forever. In fact, like, it is highlighted. It is starred. It is on the calendar. Like, it's on the map. You know it's coming. And then all of a sudden in late September, you go to your boss, your shareholders, and you're like, oh, man, that's a tough one. Like, dude, figure it out. It is your job. Like, blows my mind. Anything else, the crap that any government official gets away with, like, it would get you fired elsewhere. That's what blows my mind, is it would just get you straight up fired. Any business owner in here, you'd be like, yeah, no, if I had employees like that like just continually pulled this crap time and time again, fired. Easy, fired. All right, 5 things you need to know before the market opens. Dow set to drop 600 points in global market sell-off. We just went over why. Evergrande troubles could spread beyond China. We know that. Look at our market. Yellen issues new call for increasing debt ceiling. Surprise, surprise, if only they could have figured it out. Bond yields, oil, cryptocurrency under pressure. Yeah, so the reason everything's selling is people are going cash heavy. They want that capital. They want their own money ready to buy the dip when things start turning. So people are selling everything instantaneously. Everyone's trying to go risk off and be cash heavy. Pfizer says COVID vaccine safe, works for kids 5 to 11. That is from Pfizer and their partner with BioNTech. All right, just so you know, all of that good stuff going on. Let me go over AMC and GME specifically, just so we all know. AMC bouncing off of 40.50 at 41.75. We have GME at 198. IWM bouncing off of 216.50 up $1, 217.50. And then we also have the S&P 500 bouncing off of 433.50 up to 435. So as we're heading into market open, we have about 10 minutes. We're seeing a little bit of a bounce. So, hey, I'll take what we can get. I would rather this turn around sooner rather than later. But like I said, it's going to be a highly volatile week. There's going to be my short-term thesis just for the overall market. I think there's going to be some weakness this week. I don't know how long it's going to spill. I just want to say, hey, like I'm not myself saying, oh, no, this is the buy opportunity right out of the gate. I think there are some people who are not engaging in pre and post market who are probably like, they don't know what to do. We're waiting for market open. But that's my initial thought. And obviously AMC and Jimmy don't have to trade in the way of the S&P 500. In fact, you're going to hear a lot of people talking about beta and negative beta and positive beta and beta and every other thing related to beta. Just so you know, if you haven't heard this term before, beta is a stock, how well or inverse a stock is related to the S&P 500. So if a stock has a beta of 1, that means it moves pretty much in lockstep with the S&P 500. There's a good chance that something like Apple has a very, very close to score of 1 with its beta value. Like Apple has a beta value, I would assume, I don't even know it off the top of my head, but I'm willing to bet that Apple may be slightly better. Maybe it's a little over 1 if I had to guess. But anyway, if a stock has a beta of 1, it's going to be highly, highly related to the S&P 500. If it gains 1%, good chance that the stock gains 1%. On the other hand, if something has a beta score of like 2, well, that actually means that it does more. So like if the S&P 500 goes up 1%, the stock would go up. If it goes down 1%, it would actually drop even more. A positive 1 score means that it's directly related to it. And if you go above it, it means it's more of an extreme, like some sort of multiple involved by a linear basis. 0 means there's no relation. And a negative one would mean inversely related. So if it goes up 1%, that means that the stock would go down 1%. And then, of course, if you go even more negative, that would mean that if the stock market goes up 1%, the stock would go down even more than 1%. But anyway, so beta, it's a stock's relation to how it behaves relative to the S&P 500. So one of the interesting things here is there's a very, very good shot that at least in terms of AMC, I've been seeing this, that a lot of people are pointing out negative beta. Well, beta can be done on different time frames. So depending on the time frame for AMC, it's not, I mean, I guess it's like kind of, I don't know. It's kind of like Schrodinger's cat. Like it's kind of right, but also kind of wrong. AMC, it could have a negative beta. Yes, I see a lot of people saying that, and they're not wrong. But also tell me the time frame. Depending on the time frame, AMC right now, like when I was looking at it this morning, AMC could have a positive or a negative beta. It all just depends on the time frame that you're comparing the two, because that's all beta is a comparison between the S&P 500 and an individual stock or ETF or whatever. But yes, AMC for a certain time frame has a negative beta. For other time frames, it has a positive beta. So you can't say it just exclusively has a negative beta and like leave the conversation there. It's a bit more in depth than that. Just so everyone knows. But anyway, in terms of the numbers from Ortex for AMC, they've already borrowed $194,000 against it. Short interest 19%, utilization 91.64, shares on loan of $106 million. GameStop, they've already borrowed $38,000 this morning. Short interest is 12.3%, utilization 33.75, and shares on loan of $6.68 million. So that's just your short interest numbers. But right now, we can check on these, and I'll check on them whenever people really ask. But it's not, AMC and GME today is not being driven by retail people, and it's also not being driven really by, I would say, individual hedge funds, banks, institutions making an AMC and GME trade. The market today is going to be driven by individual stocks, will be driven by the overall market. We're watching the SPY, we're watching IWM, This is what's going to be leading people today, especially with like the uncertainty of everything. We'll be watching the overall markets. Nothing, whether positive, negative, or somewhere in between. It's not going to be too related to individual stocks on this particular day. It's very much overall market. Are people risk on, risk off? So that's what we'll be paying attention to. For my own trading plans before the market opens, I want to see how things open. If we see this as a quick fluke and people step in and buy and just start pushing it up, I'm going to hold everything. If not, if I see weakness, I myself want extra capital. So I'm going to sell my ANY position. Potentially, I'll let everyone know if I do. I'll sell that so I have extra capital to buy more of this dip at an opportune time. All right, so we are getting ready to rock for the day. We have a couple minutes. Let me get to some of these questions before we get going. Hopefully we use this opportunity to get off China. Unfortunately, we're not in the position to capitalize our economy on China's folly. Shows we are far too dependent. Scary. Evergrande is liquidating to pay up on their $300 billion in debt. The Fed says pay up on to your U.S. contract, so they'll need to sell, pay up. I don't think they're going to be able to come up with the $300 billion. I truly don't. That's billion with a B. I don't think they're going to be able to liquidate it. They're trying to sell a bunch of unfinished real estate, and who wants to buy that? Especially at the current elevated real estate market prices. It's not a good situation. What are your thoughts on SHIB? Don't have many thoughts on SHIB. If retailers own 80% before any of the institutional buying via 13Fs, how can you price go down if retailers say they are holding and institutions have to file 13Fs to sell? Who is selling? Paul, I think there's a lot of confusion. So we didn't necessarily, there were institutions involved in AMC before the report in early June that individual retailers owned 80%. So that's the first issue right there. You don't have to file new 13F when you sell. You file 13Fs every quarter, not when you sell. How can the price go down if retailers say they aren't holding? Because holding in no way impacts the price. The current buyers and the current sellers are what move the price. If, let's say there's a pool of 100 investors and 99 of those investors refuse to sell, or let's say 98, and then out of the other two, you have two people left over. Out of the 100, you have 98 who are like, I don't care, I'm not selling. It's those other two people who are actively trading with each other that are going to decide the price. Holders do not decide the price of a stock. It's the current sellers, the current buyers. People transferring stock to Computershare, what is it? So Computershare, I'm not the biggest fan of it, and I'm going to explain after the market opens. For me, though, it's just not agile enough. I mean, sometimes you have insane days like this where you want to get in and out quickly. Registering with Computershare inherently slows you down. So I'm not the biggest fan of that. Trading beta can be very lucrative. Study the trends and learn, and YouTube can become a master beta trader. Is it better to keep options with a $50 strike October 29th or move it to shares, considering they've lost 40% of value? So last week, I announced when I converted my AMC calls over to shares, because not even with this, we saw the volume and volatility drying up. And when you see volume and volatility going against you, you don't want to be in options. Market going to be looking like a sing-along this week. Follow the bouncing ball and buy the dip. Thoughts on SDC? Wait, what is Smile Direct Club doing? It's showing strength. It looks like it's gapping up. It's still, if it can hold, I like that. Relative to everything else, the fact that SDC is up 5%, that it would be, do you know how much more this would be up if the market wasn't, if people weren't just overall freaking out about the market? That's impressive. I have no SDC position, and there's a chance I won't. Not because I'm necessarily against it. I admit it's looking strong. Right now, I'm in capital preservation mode. I want to build up capital and look for the dips to buy, but hold on. Ding, ding, ding. The casino is open. All right, folks, let's see what's going on here. Is it real or is it fake? Let's find out. Let's find out. How panicked are people or aren't people? You never know. You never, ever know. All right. Just so everyone knows, for opening up, AMC's at 42, GME's at 198.50, and in terms of IWM, we do have support at 216 and then more support just below 214. In terms of the S&P 500, now we have a huge gap above it. I do think this will eventually get filled, but I think there's a reasonable chance that we're coming back down to 431 right here in the S&P 500. That's what I'll be watching, but let's see how this goes today. I know a lot of you watching right now maybe don't necessarily care about the S&P 500 and IWM. We should, just because you want these to go green. You don't want people to be so risk off. Like if the market goes down, there's just people are less willing to invest in stocks such as AMC and GME. I would prefer to see everything in the green. I know some people are putting up the theory and the thesis that if the stock goes red, that could induce margin calls on AMC and GME, and that's true. I don't think that's necessarily wrong, but also if the market goes down, that could cause people who are large into AMC and GME, BlackRock, Vanguard, to just sell, and we don't want them to sell. And remember, there's a lot more people long on the stock than there are short on the stock, so you got to be careful of what you wish for in that scenario. Matt, I need to buy some puts to hedge. I think S&P not best choice because they'll get held up by big tech. What would be more indices? Would be more vulnerable? Big dip, Russell. Yeah, I mean, you're not going to have big dip in the Russell 2000 or, yeah, big tech in the Russell 2000. So if you're concerned about big tech keeping it up, I mean, you could target IWM or you could target potentially some other real estate companies. With everything going on, is there even the slightest chance AMC can close out green today? Yeah, the slightest chance. Nothing. It doesn't, just because other things are red doesn't mean AMC and GME have to be red. That's like not a rule. Matt, have been a long hodl on FSR for some time. Could you opine? I'm thinking about shedding and buying into probable sale today into AMC. FSR is what you're asking about. Yeah, it's not looking the best. There is some support at 1225. Obviously, additional support at 960. I like Fisker. I do. I think there's better EV plays. Yeah, this has just been in a downtrend ever since the $20 range down to the $13 range. I don't know. It's with it. I would still think of them independently. I wouldn't be like, oh, I want to get out of this just because, like, we don't know if today is like this dip might be more than one day, folks. Like it doesn't necessarily have to recover today. I want everything to recover today, but that's why we have to sit here and be patient and wait for the buyers to step back in. This is definitely why I think it's worthwhile to check out those update videos that I post on this channel. For AMC, and also GME, the MACD recently crossed over into the bearish red territory. So with it, the bears currently have the upper hand from a technical perspective. We are waiting to see the bearish trend end and the bulls to start like stepping in. And that's kind of what I'll be looking for. And it could happen on a moment's notice. And that's what trading is. Like, you have to be there. You have to be vigilant. You have to be ready for opportunity. And you wait, and you wait. Be like a sniper. Wait for your trade. I'm not going to rush anything whatsoever. Let's see how today plays out. On this one, I do think FSR looks weak in kind of the medium time frame, but I am still a fan of EV, especially American EV companies. Yeah, the VIX is up quite a bit. That makes sense. VIX is the volatility measure of the S&P 500. When you have the market gapping down more than 1%, it is very natural to see volatility spike up by a considerable degree. If you want to trade volatility, volatility is up 20%. VIX is one. VXX is a measure of VIX. You have UVXY. All of these basically measure volatility. Some of them are leveraged, some of them like have their own little different flavor to it, but basically it's going to move inversely to the S&P 500, especially when it gaps down, because that does represent quite a huge spike in volatility. So VIX, VIX is the measure of volatility in the S&P 500. All right. But we are already seeing buyers step in. The S&P 500 pushed all the way down as low as 434. We're up at 435.80. I do want to say we are not out of the woods. Look at the Russell 2000. It is not holding on at the moment. But hey, AMC, nothing's ever guaranteed. And you can't say because of this exactly has to happen. But I'm just curious if we're in a weird scenario where AMC and GME's disconnection from the market, from being a normal stock, I think could actually benefit us, because there's a lot of AMC, GME apes who I think are very, very interested in IWM and excuse me, my apologies. Kelly Ripa would never do that. But anyway, I think there's a lot of apes and retail people who are involved in AMC and GME, and they're here to learn about other markets and what's going on, and they might actively trade those. But the fact that AMC and GME are already so disconnected from the typical behavior of a stock, who knows? Maybe if the overall market shows so much weakness, but the apes are like, oh, okay, like that sucks, but I still love AMC and GME. I'm almost curious if they can hold and the rest of things sell off. I wonder if people are going to be like, wow, it looks like these meme stocks are a better store of value than the overall market. One possibility. In no way a guarantee, but definitely a possibility. Save Bulldog Trading. YouTube killed our channel, and we have fought for you guys 3 times in a row. Please help our community. It sounds like Bulldog Trading, it sounds like YouTube took it down. I don't quite know why, but also just from my own experience, they don't necessarily have to have a why. So let me see if I can find it. I'm assuming that they're going to be on Twitter. Folks, if you're on Twitter, and if you want to fight back against YouTube just taking out channels, maybe just quickly Twitter search Bulldog Trading. I'm hoping that they already tweeted about it. But hey, if I can use my platform to help save channels that get ripped away from other people, we should be doing that. Apes helping apes. Power Etrade is telling me that no tickers have options. Anyone else not seeing options? Good morning, Matt. Any put plays for us today? Seems like the market is more in favor of that now. Any $8 call is killing me. Any's at $6. Yeah, I don't like that. My futures, not a stock. My futures, I am short against the S&P 500 just as a hedge for my overall portfolio. If I thought about it a little bit more thoroughly, I would have instead preferred to go short on the Russell 2000 for a quick trade, but we'll see how this all plays out. AMC showing some strength on the intraday basis, especially with the Russell kind of vomiting right now. AMC on a relative basis showing quite a bit of strength. GME at 198, AMC at 42.36. Russell 2000 looks like it might be breaking down, but S&P 500 is holding up stronger than the Russell 2000. In fact, on an intraday basis, the S&P might be pushing a new intraday high here pretty soon. Matt, all right, we did that. BBIG, Wish, all right, we'll check those out. I need to buy some puts, hedge. All right, we did that. Sweet. All right, let's see what's going on. So honestly, AMC looking kind of good on an intraday from opening till now. It's pushing an intraday high, perhaps. Let me mark this out. Why don't I have this? The current AMC intraday high is 42.83. GME's is 202. And hang on. Oh, you know what I need to do? Shoot. I should have thought of this before. Like I said, I needed some extra capital. Oh, I got demolished on any. All right, so here's what we're going to do. We'll get rid of any. I'm dumping all of my any. If it ever goes. I don't know why my orders aren't. And I just want to free up some money for some dip buy opportunity, because you never know when it's going to come. You never know. All right. I have a little bit of money. Not as much as I want, but just want to get ready in case this dip is what we need, especially on AMC and GME, especially if it's exactly what we're looking for. All right, how is BBIG doing today? BBIG got hit this morning right at support, fighting back. This one, for me to be excited about BBIG, I would need a whole nother trading day to break above whatever today's high is. So, and then Wish is not looking good right now. It's at support at least. If it breaks below the August 19th low, that's not a good deal. And you're looking for it to get back above 750. All right. So we're seeing AMC flexing, people buying the dip. All right. I like that. The Russell 2000 trying to fight back. You want to see the things on the bottom of the screen. The Russell 2000, aka IWM, the S&P 500, aka SPY. You want to see these things fight back, and that's representative to us, that people aren't going to be like, you know what? All right, people got a little freaked out this morning, but maybe we shouldn't freak out and trying to get out of here. I see a lot of people talking about ATER. What's going on there? ATER up 7.4% relative to the insanity of the day. That's pretty awesome. All right. ATER actually really showing some strength. Still don't chase it. I mean, we're not even at 945. Hey, AMC making that run to 43, recapturing a previous support, turned into resistance. We gapped down below it. We're trading back up. AMC, where would its gap fill play be? We have a nice gap fill up to 44.20. Definitely watching 44.20. That's where we closed out on Friday. So 100% looking for this. Doesn't necessarily have to be filled today, but I would assume sooner rather than later, AMC will fill that gap. ATER looking good. What I would want to see on ATER is it comes down bases and then kind of starts to pull that U-turn. I want to see a continuation of its strength. Zivo looking strong. It's a biotech, so I'm not going to trade it, but it's intraday chart. Like, this is the bend back around I would want to see in ATER. ILUS. It's a penny stock on the OTC market. I would not mess around with this one whatsoever. Unless, is there a different one? No, OTC stock. Trading the OTC market is, if you don't think our normal market has enough regulation and you're upset with like some of the things that go on, you should never ever trade the OTC gray market. SDC, I mean, it's up 6.6% on the day. It had a bullish pennant. It broke, unfortunately, in the opposite way. Lower highs, higher lows. Typically, these break upward. This one broke down. It bounced, though, very quickly, and now we're fighting back. So we're seeing some strength. I mean, look at the S&P 500 pushing. People are using this as a dip buying opportunity. Let's just see if this can hold. Able to send one of the team my way on the mod Discord. I think I found first potentially... able to send one of... Wait, Clubfoot Billy, shouldn't you be able to kick him out? One of the team my way on the new... I think I found... Clubfoot Billy, if you're thinking that they're a Greg, just get rid of that Greg. Give him the old boot. Love your opinion on NNDM? Been watching. NNDM was a stock I was tracking for a bit. They do 3D printing, but it's since gotten demolished. It just lost its enthusiasm. So now it's just a weak trade. From a technical perspective, it's just lower highs. And if this thing breaks below 530, it's kind of going to be donezo. So I would be careful with it. All right. IWM, beautiful push back upwards. AMC above 43. Let's see if he could take out 44. Got a question. Could a company cover up FTDs if the firm that was receiving the shares said they received them, even if they pretty much famming the books on both ends? I don't think the company would say they... Like, I mean, that would be... Remember, the clearing corp, the DTCC, are the people who are like, oh, the shares are here or aren't here type of a deal. So I don't think you would call the company, like it's the clearing corp that would notice the issue. For those of you that joined late, can you recap what's causing today's volatility in AMC in the broader market? Yeah, Evergrande, a huge real estate company in China going belly up. We have the debt ceiling in the US, COVID cases, and then also the Fed is speaking, and they might be cutting back on the tapering of purchasing assets. So all four of them are four considerably sized unknowns. The market does not like unknowns. All right, I think we are good there. So IWM pushing. I love the strength in the Russell 2000, and that's why we're seeing AMC. I mean, AMC pushed off of 41.60 all the way up to 42.70. So we're up over $1. And at one point it was above 43. It's messing around at this previous technical level of 42.80. All right, what else do we have going on? I didn't even check that we're good. Okay, yeah, it is rocking on Twitch. And Rumble should be working today as well. Perfect. We are firing at all syllables. I got annihilated in my fantasy this weekend. I just pulled up my points. Ooh, that was bad. Hey, that was a different league, but in the YouTube football league, crushed it. I'm 2 for 2. So I beat Review Dork last week and Avi this week. But I guess this week's not over yet, so I shouldn't be too cocky. It looks like we still have some things to play. It's been 30 seconds and you haven't mentioned AMC. I just sold all of my tulips and bought puts. I should have used this money for the dip. King Magnetic, what's going on? All right, patience, especially on a day like today. It is just past 9:45 right now. It's 9:49. Today, on days like today, I would extend my period of not creating a new position for more than 15 minutes. Truly, like when there's things like this, higher volatility, I really want to be confident in whatever the current trend is. So because of that, I just want to be like, okay, like calm, cool, collected. Remember my spiel when the market closed on Friday? You want to take your emotions out of this, folks. If you're like, if the colors are getting you excited or upset, just wait, have your plan. It's just a plan. If this happens, then do this. If this happens, then do this. That's why everyone needs a trading plan. And even if, like, I think it's easy and it's a good sound bit when everyone's like, no one's selling this, I'm buying the dip. Okay, that's fine. And I like the sound of it. Okay, but flesh it out. Where are you going to buy the dip? Let's just use AMC as an example, but all of this stuff would be applicable to GME, IWM, SPY, or really any stock. If you love AMC and if you're looking to buy more AMC and you're like, I'm buying the dip, I'm an ape, cool, I applaud you, but what's your plan? Where are you going to buy it? Are you going to buy it at 42? Is that it? Are you going to buy it at 40, a key psychological level, especially at like every $10? Are you going to wait? Are you going to give it a day or two and see if the S&P 500 is going to fill its gap upward or if it's going to sell off a bit more? There's no issue. The only issue in all these good sound bites that all these other, like, I guess, ape personality has of like, whatever, like they all say, it's like, you just need to build on it. You have to have like a true plan behind it. It's always fun to say this, like diamond handing it, apes versus snakes, we're buying, no one's leaving. Okay, that's fine. And especially if you want to like double down, but where? Just have your own plan. And I'm not saying there's a right or wrong. I'm just saying have a plan. Be like, if I see this price, this volatility, this art, like whatever it is, like it's a bunch of if then statements. If this happens, then I'll do this. If this happens, then I'll do this. If your if is never hit, well, then don't do anything. We'll just sit here and complain about the government because it's fun to do. How long could hedgies do these games? I mean, as long as they have money, pretty much until they go dry. It's more of like, what's their war chest? What is their war chest? I did want to talk about the computer share thing, but I was looking for one quick response. I was talking with some people on Twitter that I respect their opinion. Okay. So computer share, to my understanding, and I did a deep dive, but I kind of want to do a deep dive because like right at the end of like reading about it for a couple hours, I found some more information. So I do want some more time. But here's my going thought. And I'm saying this with the caveat that give me a little bit of freedom to change my opinion. Here is my, I don't know. Like I said, I put in the time and I read about it, but I think it might need a little bit more DD. So people registering their shares with computer share. I do think it's interesting because in a certain way, it can kind of bring light to some of the FTDs going on, which I think is important. But also in a certain way, like that's under the assumption that our regulators don't already know it's going on. And that was my initial thought. And then I was reaching out to this Twitter profile, Wired, WIRED. I think the guy has a lot of interesting information and should be checked out. So shout out to Wired if you're listening right now. If you're on Twitter, give that account a follow. Great information. And honestly, I like it because I'm assuming it's a guy. I guess it could be a girl, but just from my conversations, I feel like it's a guy for various reasons. But anyway, so in talking with him, he brought up a good point to me that right there, like our regulators know the computer share thing. I don't know. It's a tough one to read because do I want more exposure of like, yes, here's like a beacon and we're just shining it right on all the FTDs. These shouldn't be happening. What's going on? Regulators, check this out. But on the flip side of it, you're doing your best to prevent no manipulation. But when it's registered on computer share, you inherently become less mobile. It is really, truly, by definition, computer share is meant for long-term holders, not for people to get in and out when there's explosions in price. So you have to weigh it out of like what is or isn't right for you. My knowledge of computer share, I do not feel comfortable telling everyone that they should be getting onto it. I really, really don't, because I don't think everyone is fully aware of how immobile that would make them. As in, you wouldn't be able to willy-nilly like sell out when you want to sell out. But for other people, this is the weird part for me as a person versus like a creator and a voice within this community. Is like, yes, I have my own thoughts on like what I'll personally do, and I'm just trying to make sure it's not bleeding over into what I think is like, I guess, healthy conversation and debate for the community. So I'm doing my best to remove my own, like, okay, this is what I think is good for my money, and I'm trying to speak of it like, okay, like what makes the sense for the community. And I just, hang on, where did that? So with the computer share, I just want people to know what they're actually getting involved in the event that they choose to register their shares there. It does make you more immobile, just so everyone knows. Nothing more, nothing less. I'm not saying anything good or bad about it, because I see there's good and bad. It's not a perfect scenario, but there's pros and cons to it, like many things in life. So if you do it, like I said, like it really, when we talk about anything here, just make sure you're actually researching it and not using some Discord message, some Reddit message, or some Twitter message or something like that, or some video to be like, oh, like your one source of information that drives you to do something that could have a sizable impact on your financial situation. Just find a couple resources, dive into it, read it. It makes sense. I mean, your money's involved. Dive into it. All right. What else do we have? I think I'm finally up to date. Oh, if you haven't already, I know it's annoying, but if you haven't, I would truly appreciate it if all of you could annihilate that like button. And if you haven't already, don't forget to join up with the Moon Gang. If you're on YouTube, you hit subscribe. If you're on Rumble, subscribe. If you're on Twitch, if you want to hit that follow, all that stuff is completely free, and it's honestly the only support I ask for. I know many of you go way above and beyond, but that's why I do this. So if you just want to show like a quick thank you for the effort and the time that I end up putting in, just completely free. Like, subscribe, that's it. And if you choose to go beyond that, just know it makes my heart smile. I mean, I love this community so much. So much. All right, AMC, by the way, 42.50, 60, right in there. We're kind of seeing an interesting pattern develop, lower highs, higher lows. We have a kind of an upward going wedge. We're looking for it to break above and hold above 43. Remember, 44, 20 is the gap fill to the upside. And remember, we all know that there is a statistical advantage to gap fills. So that will benefit us in terms of AMC. Also, one thing that I could talk about, and maybe this is better for the afternoon session where I can get the facts and figures, but the S&P 500 being down by more than 1% today means that the statistical chance of tomorrow being green is very high. The entire concept is called Turnaround Tuesday, and it's a super well documented pattern. Seasonally, it's not the best for us because it is September, but the odds of a drop off on Monday greater than 1% turning into a green Tuesday are incredibly high, and I'll get those exact odds for all of you in the afternoon session today. I will be streaming for another hour until 11 a.m. Eastern, and then I'll stream again from 2 to 4, just so everyone knows what's going on with my daily plan. And for those of you in Discord, I'll be hanging out with you so we can chat a bit. But yes, Turnaround Tuesday, Red Monday, odds of a green Tuesday, very high, especially when that Monday drop is greater than 1%. Someone just called me a suit. Oh man, that's hilarious. Hey, Boxy asked, Beast, isn't this the time for hedges to cover the positions, capital to cover under market losses to get out of a loss? Yeah, but if they think it's going to fall farther, remember, a lot of people who, I shouldn't say all of them, but a lot of people who are betting against AMC think it's going sub 10. So if they truly believe it's going sub 10, why would they get out at 42? I see people are talking about TMC. Is that moving? I don't know. TMC, I never thought was that good. It's up 5%. This daily chart is awful. I'm not a fan of TMC. If you're in it, I hope it plays out for you. But TMC is in no way my own personal style. And if it's not my own style, I'm not going to trade it. TMC, it's just, what an ugly chart. How's IRNT doing? Also not the best. How's AMD doing? Not the best. NVIDIA, gapping down. Apple, gapping down. MSFT, not good. Baba, not good. Ooh. Baba, I mean, I like Baba. I think it's undervalued, but just with the insanity and uncertainty in the market, I'm almost curious if this is a reasonable put play on Baba. How's Neo doing? Same thing with Neo. I like Neo. I like the EV sector, but I mean, it's just the pressure on individual big name equities, especially if they're headquartered in China. The pressure is immense, folks. It is so immense. What are your thoughts on SDC, and can you check its Ortex data? I certainly can. Ortex. We'll check the Qs. This is the tech sector. We'll see how tech's doing on the day. Tech. All right, where are we at? SDC, Smile Direct Club. There we go. GME catching a very nice bid, shoving it from 198.50 all the way up above 200. We're at 201. I don't think AMC will be far behind. I really don't. So SDC has a short interest of 48.54%, shares on loan of 46 mil, utilization of 96%. Interesting. I wish it was a bit of a lower flow. I also don't know if SDC is on the threshold list, so I don't know if it'd meet my prerequisites. And also another reason of why I was willing to cut my any for a loss, a sizable loss, was it's no longer on the threshold list. So for that style of trade, these FTD, like short squeeze trades, SPRT, all of those, BGIV, not AMC and GME. AMC and GME are completely different trades. That it's just, if it doesn't meet my prerequisites anymore, you have to cut it. It's that if-then statement type of a deal. Whoa, folks. We are getting into a very interesting situation. AMC and GME are flexing their muscles while the market is looking a bit weak. Interesting. Oh, brother. We're seeing some divergence. You scroll through 6 stocks and go, not good. Okay, let's check Apple. Not good. Next, not good. Yeah, I mean, I was just going, that's why I brought up the Qs. I just quickly ran through some of the major tech stocks. But there's just pressure. It's pressure, but okay. That's all good. Someone just said negative beta kicking in. Negative beta, you wouldn't use beta on like a minute chart. Like beta is very much, you would care about it more on like its daily action. You could use it, but I mean, I've never seen beta being used on like, a minute to minute chart, especially when we're only a half hour into the day. That's not when a beta or negative beta would be applied. I'm currently looking into FF as a threshold play and an EV play, FFIE. I have 20K to park somewhere for about 6 months until I buy a rental property. I am in Canada. What do you think about Vanguard VFV? I mean, Vanguard is just a huge, I don't know if it's multi-international, but it's a huge money manager. So like, I would say it's on the safer side if you're just looking to park, but also 20K. I mean, I would almost, if you knew that money at that time frame, I would almost look at like a stable coin and just get the interest payments off on 20K if your other better option is investing in a huge money manager like Vanguard. Or if you have a bunch of stock, you could use that capital for covered calls. Like that's another thing you could do for 6 months. So you could sell covered calls 6 months out or something like that. I guess there's a lot of ways you could play it. But if you need that money specifically for a rental property, I do agree you should keep it on the safer side. So you could just look at like some higher interest stable coins or covered calls. I would say that they're pretty safe, like depending on how you decide to play it. BBIG coming back and holding his own today. Market conditions. ATR winning the day. ATR, how's that one looking? ATR, it was winning the day. Right now, not looking the best. Lower highs, same lows. Let's hope it can reverse trend. And it might if the SPY and IWM start pushing again. We want basically everything to reverse trend. But we're seeing relative strength in AMC and GME. Puts a smile on my face. Someone's asking about MMAT. MMAT is holding. It does have some room to make up. It kind of needs to get back above, let's call it 540. But hey, it's holding. Definitely could be worse. Could be worse. All right, sweet. Sweet. GME back above 200, right where it's comfortable. AMC looking strong, flexing its muscles, trying to make another run to 43. Like I said, the gap fill is 44.20. I think there's, I'm not calling for today, but just from a technical perspective, even if I didn't know about AMC at all or what was going on with it, my instinct on AMC, once again, not knowing anything about it, I would look at the chart and I'm like, oh, gap fill up to 44.20, which would be like, what, another $1.50. All right, what else do we have going on? I'll leave these up. Let me see if there's any news. I'm expecting there to be like quite a few articles and stuff written today. What else? What else? Hang on, let me check some of these news accounts. What is Zero Hedge saying? U.S. will require foreign adults to be vaccinated for entry. That was just announced. VIX, the volatility measure of the S&P 500, jumps to the highest level since May. Ooh. TICK tick is negative 2,000. That was at market open. DoorDash launches dedicated alcohol delivery service. What else do we have? Apparently, ETH went sub 3,000. All right, let's see. I'm seeing what a strange day. AMC and GME, yeah, they gap down, but they're fighting back. AMC is down 2.7% right now, but it just got back above 43, just made an intraday high. Folks, this is the technical stuff that I've been teaching you about. Gap fill. We're watching 44.20. I think there's a very considerable chance that we get to 44.20. Hopefully today, and hopefully that strength gets people to stay in and buy more. And maybe as people panic from the overall markets, they say, you know what's holding on? These meme stocks, and we end up getting pushed even higher. But hey, I think they're... Over the past week, the craziness we've seen in AMC and GME, I think you have some new apes who are kind of now at the point of like officially earning their own diamond hands and understanding what it is to like kind of hold through the like some of this craziness. Hey, Matt, can you please retweet and post? We tagged you in Bulldog Trading Channel getting terminated. We would greatly appreciate your support. Yeah, if I could find it. So I want people, like, I'm not just making this up when I'm saying, like, I just loaded my Twitter. Something weird here. I just clicked on my notifications. I only have apparently 2. An hour ago and 50 minutes ago. Shout out to Ghost in My Coffee. Matt Kohrs is fired up about AMC and our government today, and I love it. Just do your job. Last week was frustrating. Like, I don't know what's going on with my Twitter. Apparently, this is how non-notable I am, how unnotable I am. I get two mentions. My direct messaging, it seems to have started working again for some people, but I get them super, super late. It's just, I don't know. Ever since I applied for the second time and got denied by Twitter, all I've had are tech issues and just nothing loads with it. Could a market crash benefit us AMC holders? I don't mean this just to sound like, oh wait, hang on, that's in no way helpful. It could benefit us, but it could also severely hurt us. It depends, and the way I say that is, it depends who folds first. The people who are long in AMC and they're like, hang on, we need extra money, or the people who are short against AMC, if they say, whoa, we need extra money and we need to cut this, you don't know. It's a race. Is it going to be the AMC bulls or bears that feel the pressure first, more immensely, and pull their position? It's a race, and I don't know who's going to win that race. The DTC runs DRS, and I haven't got an answer from supporters of why I asked what stops computer share from creating synthetics if hedge funds can short through them. Because the DTC runs DRS. I haven't got an answer from supporters when I ask what stops computer share from creating synthetics if hedge funds can short through them. Hang on, I'm trying to fully understand this question. What stops computer share from creating synthetics? I don't think, I think synthetics is a term that this community has taken on without really understanding even what synthetic means. A synthetic share is a term created by this community. Before this, synthetic share was not a term. Terms would be used as a phantom share or a counterfeit share. So I need to make this very, very clear, because if you search synthetic share or synthetic or anything like that, if you find anything, it will be related to the options market. I don't know how it got created. It makes sense because, like, okay, synthetic, counterfeit, like if you crack open the thesaurus, you're going to see that they're going to be related. So I get how. I'm just trying to explain to people who are like, if you're Googling it and you're like, wait, what? Like, why can't I find anything? Well, that's why you can't find anything. You should search counterfeit share, naked shorting, phantom share. So I just want everyone to understand that, because like it was just like kind of a made up term that was not widely accepted beforehand. But anyway, that's the term Keating Grace always uses. I mean, a lot of people use it, and I'm not saying it's wrong, because like, I mean, the entire point of using any word is to communicate an idea with someone else who also understands the term. So I just want to make sure we're all on the same page with that term. What in this, now the way the term is being used, what is a synthetic share? A synthetic share is a share that's created from naked shorting. Remember, to short, you borrow shares from someone who owns it, you sell those shares to someone else, and eventually you have to buy them back to close the position and then return the shares to the owner. A synthetic share is the share that gets sold to a person when you never properly borrowed it from the person you should have. You created a share out of the ether and you sold it to someone. That's a synthetic share. A share that was sold that should have never been sold because you never had temporary or any form of ownership over it. Just so we're all on the same page. A synthetic share is a share created from naked shorting, to put it at the most layman's terms possible. So with that, like, creating synthetic, like that's what creates synthetics. And I think we need to get all on the same page with it. But anyway, with computer share, so I do like the advantage of computer share of kind of cracking down on FTDs and taking a better look at that. And it does in a certain way hamper manipulation. But the cost to that is becoming very immobile. Your agility in the market is dampened by using computer share. Matt, look at IronNet. What's going on with IRNT? It's up 7%. Having a good day. I don't like the daily chart. This isn't good. It's not necessarily out of the woods. If it gets above 37.70, completely different story. But right now, IronNet is a watch. I don't think this is in a buy territory. I don't think this is in a sell territory. This is more in a purgatory of sorts where you just have to wait and see how it all plays out. If Evergrande happens and it crash, wouldn't that mess up institutions that are against us? Yeah, but it would also mess up institutions that are with us as well. It cuts both ways. Hello. All right, we did that. Matt, thank you. I made my first successful trading trade by sticking to my trading plan. ATR 1088 out at 1203. Listen to your Friday advice. Robert, I love that. I love that. I love that. I love that. Seriously, congratulations. Everyone, this is, I mean, so I get these things about, like, questions about being a trading guru and, running an education course. And isn't it weird when people feel like they can do that and they have absolutely no credentials? Like, I truly, maybe it's my anxiety or maybe just me being an introvert. Why do I not have a trading course? Why has Matt Kohrs not created a trading course? Because who am I to be a trading coach? I'm not. I've been in it for a little bit, but it's not like I'm some guy who has like some insane story of like, I took 10,000 and turned it into 10 million and here's how I did it. All you have to do is 5 small payments of $5,000 every 5 days for the remaining 5 decades of your life. Join we're Kohrs traders and we're making money every single day, gazillions of percent. Join my course, buy, sell, join my course, give me your money. Folks, I'm 27. I've been trading for about a decade. I have so much more to learn. I share for free what I know now, but I'm not in the position to have some special like full trading course. Like, does no one see the bullshit in that of these like TikTok investors of, I'm 14. I just got out of PE class first period, but here's what we should be buying today. Are you kidding me? Folks, I love teaching. I truly do. I love it so much. I love seeing people like learning, but I have not achieved enough in my trading career to be some trading guru, furu, whatever you want to call them. I'm more than happy to do this for free. I'm more than happy to teach you what I currently learn, but I'm on my own journey, folks. Like I truly am. Like I'm not some decorated Wall Street titan that you should be hanging at like every single sentence I say. That's not how it works. I'm happy to teach you what I currently know, but I myself am still on my own trading journey. I have a lot to learn about, and I hope a lot of you want to just join that journey for me. But like I don't know. I don't have some awesome, amazing Wall Street career. So like, and because I don't have that, I'm not going to make some course about it. And I guess the only reason I'm commenting on it is twofold. I got a couple DMs like over the weekend of like, oh, you should make your own course. Like, get off YouTube, have your chat. No, I have my own qualms of people doing that too early in their career. Am I saying it's bad? No, I'm just saying I don't perceive myself as a good enough trader to have a full-on education course, because I'm learning things myself. I don't like that. But more importantly, that's like 1 to 2% of my recent comments. The other 98, 99% are like these TikTok traders, these Twitter traders. Like, who are you? Like, what? Like, people are taking advice and input from people who like just learned about the market. Like, literally within like the past week, month, 6 months. What? That's the craziest thing ever. Imagine, okay, seriously, like, imagine I like read up on being a lawyer or a doctor or any of that stuff over the past couple months, and I'm like, here's what you need to know. Like that's the most insane thing. And these people acquire huge followings. And I'm like, that is just danger. I think everyone should honestly, if you're going to do it, you should like almost treat it like the start. Like, I should start all these people on social media. It's just, I see it being dangerous, and I see it dangerous way too quickly. And this morning I was watching some TikTok investors talking about this sell-off and what it means and why it's selling off. They didn't mention any of the actual reasons why it's selling off whatsoever. I think everyone on social media, if you're talking about a certain thing, you should start off your entire video or Twitter spiel or any of that with how long you'll be like, hey, before I talk about whatever industry, just want you to know I learned about trading a week ago. Like, I think everyone should like be very forward with how long they've been in the thing that they're about to try to teach you about. And I have no issue with people who are sharing their journey, because I feel like I'm sharing my journey. Like, I don't want to be speaking from some position of authority, because I don't think I have much authority. So I'm not going to be like, this is the market, this is what you need to know. I'm going to say, this is how a person who's been involved for the market for 10 years interprets the situation. If someone comes at me like Dave Lauer, who's like, I've been in the market for 30, 40 years, I would probably put more weight on what that guy says just because he knows more about it. But like, geez, it's dangerous when we get into a scenario where there's people who have a big following, don't know much about what they're talking about. And I'm like, dude, this TikTok thing, it's driving me crazy. I just see these people who, they simply haven't been alive long enough to talk about the thing that they're talking about. Like, it's just like, dude, you got to get worried about your junior prom. I don't think you should be talking about the like intricacies of macroeconomics and how China's fallout could impact us. Like, that's insane, dude. Like, it's the most wild thing. I don't know. It to me, it's so funny. It's so funny, but also could be sad. So it still always does come back to the inherent truth of, do not make any single trade based on something you hear on social media. If you agree with me, awesome. If you disagree with me, awesome. I don't care. But just because I say something, just because anyone says something, in all reality, they're and I see this is why mainstream media and the SEC, when it comes to social media, is ripping out their hair. Because how do you draw the line? Very honestly, like, for me, I try to draw the line of like, okay, don't tell anyone to buy, don't tell anyone to sell. At all points, be as honest as you could possibly be, and be upfront about your opinions. Right there. I was in any last week. I told you I sold any today. I'm out of any. So that's how I've been running it. But then you hear about these stories of like, especially all these crazy scams going on in crypto, of these people like pumping and dumping entire NFTs or entire coins. They're like, we're buying, and then they sell like a second into the ICO, the initial coin. Like, there's just so many scams. And I don't know, one of these accounts who I've been watching that like really dives into the scam and calls scammers out is this YouTube account called CoffeeZilla. Amazing work. If you don't know who CoffeeZilla is and you want to see people getting called out for being complete scumbags, check that channel out. It's awesome. It's so cool. So cool. Exactly. Follower count does not equal authority or experience. Oh, in no way. In no way. Morning, Matt. Bought some October 8th $60 calls for AMC. First time I bought AMC options. Got them at a great price. Already up 15%. Your thoughts on AMC call options? I'm still not the biggest fan right now, just because the volume and volatility is not where I want it to be. When I see volume and volatility return to AMC, I'll get back in AMC options. But right now, it's just not the environment of what I look for in options. Someone said CoffeeZilla exposed Phase K. I don't know the individual Phase people, but I know that there was some, like, it was another crypto pump and dump with some like crazy coin or something, and it was bad. It was not a good scenario. I get the trading course. You're only the best crypto and Tesla trader on this side of Pluto. Now what's your excuse for not having a fitness program? I did run yesterday. I ran just under a 5K yesterday. And every single step I took, I just thought about how much I hate running. I was like, I hate this. I hate this. I hate this. I hate this. And I don't think that's a good mindset to have, but I need to get into some better, I don't know, ritual, because my own health has not. I need to do some exercise. So regarding, this is a great question. Shout out George. So regarding synthetic shares, are they still valid when you sell? Because I'm guessing some of us own them. Yes, there's no designation whatsoever of if you have a real share, a counterfeit share, a synthetic share, a phantom share, an abstracted share, whatever you want to call it. If you own one, when you go to sell it, you're going to be credited it. And it's not like if you own it, your brokerage one day is going to be like, hey, we found out all those shares you own are synthetic, so we're going to take them from you. No, you still own in your eyes, still a legal, valid share. Obviously, the share is illegal because it's a synthetic one, but it's not going to get ripped away from you. And when you go to sell it, eventually, you will still get the appropriate credit you deserve for it. So don't worry. So in a certain way, I guess that's more of the definition of FUD, fear, uncertainty, doubt. Should you be worried about you owning a synthetic share? Should that cross your mind at all? Could that cost you money? Could you lose out on a situation? Absolutely not. No. Do not have fear, uncertainty, or doubt about you owning a synthetic share. Does that mean you don't own one? No, you might own one, but you're still going to be able to sell it. You're still going to get the money for it. You still carry the risk of having a normal share. Shares are in no way designated of like real versus fake. That's not how it works. Do we trust in the owners of the computer share would not use the collected data to benefit themselves, possibly to the detriment of apes? I don't know about that. Like some of these things I love throwing on my tinfoil hat of conspiracy, and other times I don't. Computer share, I mean, I don't want to be speaking out of turn, and maybe I just don't know enough about them, but I mean, you have big players who trust them. Like seriously, like names like Warren Buffett register their shares on computer share. So like, I feel like they would like do their own DD on it and make sure it's like a legitimate thing, but I don't know. I am not registering my shares on computer share. Like, and like to my understanding, this is like a bigger deal, especially when it comes to GameStop. Like all the computer share DD I've done more so relates to GME, just so everyone knows. But I put too much of a value on being agile, and I don't want my shares to be tied up. Matt Kohrs rants about people pretending and lying on the internet. Also, Matt Kohrs claims to be in his late 20s. Something isn't adding up here. Wait. How old do you think I am, all boogie? I'm 27. I turned 27 in July. Is this entire internet saga like just aging me too much? Or are you like, he's totally in his young 40s like this kid? You like working out your brain, not your body. Brain, think exercise is boring. Brainiacs think exercise. I mean, I like it. I just, it's a time thing. And whenever anyone says I don't have the time, I get it. You're just being lazy. And that might be a hot truth for some of you listening right now and be like, oh man, he's really calling us out. If you say you don't have the time, you're just being lazy. And I admit I'm being lazy. Because what's my reasoning for not working out? Oh, I don't have the time. You're being lazy. You make the time. The things that are important in your life, you make the time for. No one here is so incredibly busy that they simply can't do something. You're being lazy. You got to cut out the other things. Like there's other things going on in your life that you necessarily don't have to do. It's all about priority. No one I know works 24 hours a day, 7 days a week. There's time. I have the time. I lean on that as a crutch. I'd be like, oh, I stream so much. I work so much. When would I possibly work out? When I know the quiet voice in the back of my head's like, yeah, you're just kind of being a bitch about it. But that's life. That's life. Listen to you every day and you rock. I am moving my AMC to public, which is preferred app for options. Thanks, bro. So it depends on like how serious you want to get into options. If you still want I really think that Interactive Brokers and Thinkorswim are pretty like awesome options platforms. But just so you know, it is very, very difficult to get away from options trading payment for order flow. In fact, I actually don't even know of a brokerage that has options trading and no payment for order flow, just so everyone knows. Is there Etrade a good trading house? Etrade's a good brokerage. I mean, it depends what you want to do it for. If you're talking about stock in terms of through the lens of an ape and doing no payment for order flow, it's pinned to the top of chat. If you're looking to buy the AMC GME market dip and you don't want payment for order flow, as in no market makers, no dark pools, all your trades going to a lit exchange, there is no reason if you're in the US to not be on Public. Public.com/Matt Kohrs. It's pinned to the top of chat. If you're looking to buy the dip, well, hey, you can get up to $70 of free monies right now for just signing up. It's free trading, but what's best about it, there's no market makers. There's no payment for order flow. As I've learned more and more about this, people will wear their tinfoil hats and act as if dark pools are the worst detriment to our current market system. And I mean, I guess, I don't know, maybe I'm just in a mood today of just saying the things that I know not all people aren't going to want to hear. Dark pools are not the worst thing for our market. I would wholeheartedly argue that payment for order flow and the current state of market makers is way, way more exponentially detrimental to our market than dark pools. But even with that, even if that is your like the hill you want to die on and be like, I don't care about that, I hate dark pools. Well, okay, cool. Public still solves that. If you hate dark pools, if you hate market makers, if you hate payment for order flow, welcome to public.com. Pinned to the top of chat, free trading. They don't have options trading. So if you're a big options trader, that will not be the brokerage for you. But it's good for stock. They're about to roll out crypto. I don't know which one of their cryptos will or won't have wallets. When that comes out, I'll let you know. But for right now, in terms of crypto, I've been using Voyager. The code on that is MATT21, MATT21 when you sign up. So for Public, you can get up to $70 of free stock when you get going with that. And on Voyager, you have to trade $100 of crypto. And if you put in that code MATT21, you'll get an extra $25 worth of Bitcoin. Matt only reads paid questions. That's actually wrong. Fintel shows 30 to 60 million short volume each day. Ortex shows that only borrow a few million. Been like that forever. Can't both be right. No, those are referring to two completely different things. Well, I mean, you even just said it yourself. Fintel shows 30 to 60 million short volume each day. Ortex only shows a borrow. Borrowing shares to go short and short volume are two wildly different things. Wildly different things. In fact, short volume, if you're looking on Fintel, short volume, it's not completely useless, but it's borderline useless. Here, I'll show you just so everyone knows what we're talking about. I know you read the pleb comments too. Where's the short volume? Yeah, right here. Short volume, short volume, short volume, short volume. Short volume, you could look at this and I say it's complete, not like it's almost completely useless, but not really. The one utility I find out of short volume is the trend over various days. Is it trending upward, downward? Is it going sideways? But to look at the magnitude, that's unusable because this is what's referred to when you look at short volume. It's referred to as dirty data. And the reason it's referred to as dirty data is because you don't know if those are just high frequency traders or market makers who are in and out of a potential short position before you could blink an eye, or is it legitimate short? So you look at the magnitude of short volume and there's no way to know the proportionate amount. It's an unknown proportion. Which one are legitimate shorts and which one are market makers, high frequency traders just providing liquidity to the market who don't really care about the direction of the stock. They're not bearish. They're simply providing liquidity or taking advantage of basically the slow speed of some technology. AKA high frequency traders. So with it, short volume, you could look at it. Is the overall short volume going up or down over various days? Because even though we don't know the proportionate rate, if the volume's always going up and the unknown proportion, if it's roughly staying the same, we could assume that there are more shorts. But using the magnitude of short volume, and honestly, if anyone out there, if this is another sign, there's so many signs of creators who just don't really know what they're talking about. If someone simply looks at short volume and look, the short volume today is 18 million. Well, they just don't even know what short volume means because that in no way provides utility. That doesn't tell you squat. What we care about and what other people should care about is the amount of borrowed shares and the amount of return shares. And it's just because of that, the short volume itself, it's dirty data. Like I said, not completely useless. You could look at it over the span of multiple days and see the trend. Is it trending up? Is it trending down? I personally find utility in that, but to just use the magnitude of short volume, that it's not a good metric. Does short volume include selling calls or just shares? Just shares. This is not a question, but Matt will read it anyway. Proving the statement about paid questions false. I mean, folks, it's weird. I mean, I feel like it almost ebbs and flows on these keyboard warriors who get pissy about super chats. Hey, it's not required. If all of you unanimously agreed that you no longer want to send in super chats, okay, I'm still going to be here. I'm still going to be doing my thing. It's a tip. The way I go to a restaurant and I get a sandwich, I get a burger and a beer, and if I like the service, I'm like, okay, here, sick, 20%. Thanks for doing it. It's a tip. It's a donation. No one is forced to do it. No one is forced to do it whatsoever. If you don't want to send in a tip and you would prefer to buy the dip on AMC and Gmail, have at it. I seriously have no issues with it. I don't know how to make this more clear. The only thing I ask of you whatsoever is just a like and a sub. Nothing else. If you feel like you want a tip because you're happy of some piece of information I shared with you, okay, sick. I appreciate it. That's awesome. But no one should ever feel pressure to do it whatsoever. Apple chart. Apple. What's a good entry? It's a tough one. Okay, so interesting opportunity at 141 and some change. If it breaks below that, scooping up Apple at 136 is such a freaking steal. I don't know if it will come back here. It kind of depends on how bad this whole debt ceiling, Evergrande, like Federal Reserve policy, like there's a couple of things we need to pay attention to understand if Apple will or won't sell off. But the lower it goes, Apple becomes a more and more interesting opportunity. These big blue chip stocks, today is not the day I feel like buying them. I think we need to let the SPY play out for a couple more days just to see what's going on. I mean, it's only 10:40 in the morning. The sell-off might last a couple days. That is a possibility. If Apple gets in the range of 135, 136, I mean, even the low 140s is a great opportunity on Apple, especially if you have a longer time frame. And that's how I view Apple. Apple, Microsoft, Nvidia, Palantir, all of those stocks are stocks that if you see a big dip, or at least what I do, I see a big dip, I buy it in my long-term account, and I forget about it. It's that simple. Mary, love you, Matt. Here's a tip. I appreciate that, but like, I don't like weird. These people get so pissy about it, and they're like, I don't know. Have I made decent money, like very good money off of YouTube? Yeah, I have, but like, I feel like I'm not trying to hide it. It's a business. It's a new type of business. One part of my business is my own personal trading. I don't trade for anyone else. That's a whole new scam account of like, I'll run your money for you. The bullshit, will I? No. I operate my own money and no one else's money. So if that's like, I saw a new scam of like, hey, I'm running money for people. No, I'm not. And I will not. That's crazy. I have enough to worry about with my own account, no less other people's accounts. But anyway, what was I? The other part of my business, it's YouTube. I'm doing the best I can. It's like a business of me, and it's just another business. And instead of people getting pissy about it, it's just, hey, if you want to be a content creator, especially in the finance sector, have at it. Like I've shown the business model that streaming the market, if played right, if you give out good information and you provide value, could be lucrative. Thoughts on SDC? Is SDC still moving today? Smile Direct. We just checked it out. It's a higher short stock. Not the best intraday chart. Let me drop to the 3-minute. So Smile Direct Club, it's interesting. I don't know. Like, I'm not, I do like its metrics, but I would have been done with Smile Direct Club on September 14th at this gap fill up to 6664. So I really don't even know how much my input would have been viable, because to me and my understanding of it, like I would have been like, okay, cool, it gap filled, I'm on to the next one. I see a gap below it. That worries me, especially with the market right now being a little bit iffy. Like, are people really going to be okay with risking $6 when it's currently trading at $7? It's been on a move ever since 460. Like, it could keep going, but I just don't know if the risk reward is necessarily there, and it's a medium float stock. Make the My Money, My Choice shirt. You tip, what a shill. How dare you? You better be off. FATT went out. What's going on, Wall Street Viking? I tip because I work for a living and can't actually sit and watch the market. Thank you for everything. Also pisses off the keyboard warriors. Yeah, I don't think that they realize like they're their own worst enemy. I mean, well, we have the proof of that with his super chat Matt shirt. I mean, we ended up raising $20,000 for St. Jude. Like, slapped him in the face. There are 13K people in here plus people on your other streams running. How do they expect to see each and every question with the chat running like crazy? If they don't like it, don't pay. Simple enough. Jessica Knight, spitting some facts. Matt, here's a tip and just the tip. Got some of those SQQQ thoughts. So you're betting against the tech sector. SQQQ is the inverse of QQQ. So the SQQQ will go up as the Qs go down. So this is going long on SQQQ is an inverse bet to the NASDAQ 100, the Qs. Matt, will gap fill on the 15 at 43, possible gap fill up? So the gap fill on AMC is up to 44.20, and I feel strongly, market, it's 10:45, September 20th. I feel strongly AMC, given enough time, will gap fill up to 44.20. What else do we have? Matt is too bougie to read regular chats. I read it. Hey, Matt, doing a great job for a Penn State grad. Hey, Penn State. Hey, are there any Auburn fans in attendance today? Because if so, we should talk. I mean, first of all, we beat you. We beat you fair and square, and you guys even had the refs paid off. Do I know if that's true? No. But does it seem like in the Penn State Auburn game that the refs were clearly against Penn State and we won anyway? Yes, without a freaking doubt in my mind. They can't even count the downs anymore. Like, you have to admit it. Even if you're an Auburn fan, you have to admit that the reffing was just so bad. It was so infuriatingly bad. Oh, man. I don't know who that was, but hey, Penn State now 3-0. At least, I guess if that is coming at the detriment. So Penn State won. Very, very happy about that. The Eagles lost, not the best, and my fantasy teams are not looking good. So, just give me this little Penn State thing because it's like the one little victory, football-based victory I had over the weekend. Charles Payne and Melissa Lee tweets. Ooh. What did Melissa Lee say? Calling on the AMC army. I'm working on a documentary about the ape saving AMC and shaking up Wall Street. We would love to hear about you and why you are an ape. Please send a short video about why you are in AMC to apes at nbcuni.com. That is apes, APES at nbcuni.com. By submitting the video, you are confirming that you shot it and will irrevocably grant CNBC non-exclusive irrevocable permission to use the video in a documentary about AMC on all platforms and media worldwide in perpetuity. So if you want to share your why about why you became an AMC ape, check out Melissa Lee. Send it to the email if you want to share your why. That is awesome. Charles Payne, what did he tweet? So he responded to some other person, Darian Harper, AMC GME. That proves it. Major market issues, and CNBC is still infatuated with AMC and apes. All these are other companies struggling today, and we are called out. That should tell you everything. Pretty validating again, and we have something very special. Infatuated might be the wrong word. This is Charles Payne's Making Money with Charles Payne. This is his response. Infatuated might be the wrong word, but lots of folks in financial media are invested in the demise of AMC and GME, so you don't hear about big moves higher while pullbacks are seemingly cheered on. Yep, there are bigger fish to fry today, but none taste as good to naysayers. That's spot on. I mean, it's become emotional for so many players on both sides. So if AMC goes up a little bit or down a little bit, it's going to seem and feel more dramatic because you have so many outspoken supporters for AMC and Jimmy, and you have so many, as Charles Payne said, so many people who are financially invested in the demise. Like it's become a very dramatic, emotional thing in this stock. So you have other stocks that are going to be up or down quite a bit, and you're going to hear sometimes absolutely nothing. Do you know how many stocks are going to currently have a worse red day than AMC and GME combined, multiplied by each other? And yet AMC and GME are going to be the ones on the headlines that like ape stocks, meme stocks. It's going to say Reddit stocks sold off, when it's like, dude, the market is selling off. That's just life. This coming Friday is World Gorilla Day, and we hope to help saving gorillas, apes helping apes. Move those SDC tendies over to AMC this AM, ready for the gap fill. Also loaded up on Cardano at $2, easy money. Oh, brother. Shout out Ryan. Lawyer up before you send a video of yourself. This seems like a trap. Obviously, everyone can have their own opinions on CNBC and all that stuff. I take people on an individual basis. I don't think one person's action should color your entire opinion of CNBC. I don't think one person's action at Fox should color your opinion at Fox. And this, honestly, it does directly relate to a political thing of people like to bucket. It's easier. As soon as you bucket, it's easier as a brain to like group it and be like, oh, this is my opinion on that. And people, we are every single day getting away from individual critical thought. Am I a fan of everyone at CNBC? No. Am I a fan of Melissa Lee? Yes. Am I a fan of everyone at Fox? No. Am I a fan of Charles Payne? Yes. It is okay to be a fan of individual people and their efforts and not an entire news media station. That is acceptable. I am not, and that goes with anything. And like, that like freaks people out these days. They're like, I have to be against this entire news outlet. I have to. No, you don't. Why? Whoever made that rule? At CNBC, I like Melissa Lee. I don't like Sorkin. At Fox, I like Charles Payne. I don't like dipshit Charlie. It works. Like right there, like to me, it seems so weird that you have to bucket an entire media source and be like, I like all of them or I dislike all of them. When really, isn't the truth somewhere in the middle? There's a good chance you like some of them and a good chance you dislike some of the others. That's my own opinion. Hey, Matt, might be time to talk about inverse ETFs and how they work. Thoughts? So inverse ETFs are just going to move, like SQQQ is an inverse ETF to the Q. So you have QQQ and then SQQQ. So SQQQ being inverse of the Qs of the NASDAQ 100 means if the Qs go down, the SQs go up, or vice versa. If the Qs go up, the SQs will go down. Inverse ETF just means it is inversely moving the opposite direction of the base, whatever it's tracking. And some of them are leveraged. You can find leveraged ETFs. You can find inverse leveraged ETFs. So if one drops 1%, the other one could go up 3%. It depends on how it's structured. But if you want to find a whole host, like if you don't want to play with options, but if you think the market's going to fall and you're questioning how can I make money, there's various ways. You can go long on volatility, or you can go long on inverse ETFs. And to find them, you just search S&P 500 inverse ETFs, Russell 2000 inverse ETFs, NASDAQ 100 inverse ETFs. There's a lot of them. It's not just one. Or you could just go long on the volatility. So you could search S&P 500 volatility. You're going to find VIX, the VIX, VXX, UVXY. There's a ton of those as well. All of those are ways that you could make money by going long if the market sells off. Hey, Matt, all right, we talked about that. Sweet. Saving gorillas. It is, so it's this Friday is World Gorilla Day, this upcoming Friday. It's almost spooky season, folks. I love the fall. The fall is such a great time of the year. What's your honest opinion on FAMI? They did their second offering within 6 months and they needed above $1 by the end of November. What, to get uplisted, I would assume? Oh, no. No. I don't like this stock. I don't even need to think about it. I don't think I've liked it for a while. It was probably boring if someone asked it about me previously. This stock, well, first of all, it's a penny stock, so I don't like it for that. But even if it weren't a penny stock, super, super weak. Like, what an ugly chart. I would not go long. I'm not going to go long on FAMI. In fact, if I had to trade it, which I'm not going to trade it, I would bet against it. But I'm not going to trade it anyway because it's in a sector, food retail, that I'm not the most knowledgeable about. I don't know much about this company. It's a penny stock, but it is looking weak. And they did 2 offerings, so they're diluting the stock. I don't know. UVXY is another like leveraged volatility. So UVXY is, it's not the exact same thing, but it's similar to the VIX. Let me explain exactly what is in the UVXY. I think it's, yeah, so VIX, it's the UVXY is a 1.5 times leveraged VIX. I knew it was leverage. I didn't know. For some reason, I thought it was a 3x leverage, but it's a 1.5x leverage. UVXY, that's the ticker, is a 1.5x leverage fund that tracks short-term volatility. So it's tracking VIX. I don't know why I thought it was a 3x leverage. So that's what I was saying. It's just a leverage one. Evergrande, China, they're getting blamed for the crash. They have a lot to do with it, but also so does the U.S. debt ceiling and the political gridlock, because our politicians have like the psychosocial development of like attention-seeking children. And you also have the Fed speaking on Wednesday, and there's fears that they might announce that they're tapering their asset purchases. So basically, we have 3 big unknowns, and whenever you have unknowns in the market, it goes red. People don't like unknowns and uncertainty when it comes to like the potential risk of trillions of dollars. Matt, shout out to your number 1 fan, Gloria Lorenzo. Shout out. I heard that the next Gamma Squeeze chance is January now. Are we long now? True. I haven't heard that, and my instinct would be to disagree with that. The next Gamma Squeeze chance is January. I don't know how they would have come up with that, but I don't agree with it. Matt, I'd say to lawyer up for any of the corporate press outlets. I'm with you. Sending in videos could get apes to say something not recommend. Yeah, so with that, if you don't want to share it, just don't do it. Like, it's that simple. Like, if you don't want to share your why with Melissa Lee and that documentary, just don't. Like, if you have a little bit of concern, don't. But if you have no concern and you want to share your story about why you became an ape, have at it. I understand. I'm not saying that there's no legal risk whatsoever, and you have to weigh that out. But on the other hand, what I like to weigh out is, well, for us to win this, we need more and more apes. So it's good for the average person to hear why another average person got into this, because I don't want it exclusively to be these ding-dongs that are like always speaking from the viewpoint and the vantage point of Wall Street, explaining to people sitting on their couch at home why the apes are stupid. So I don't know. It goes both ways, but there is a clear advantage for our message getting out to more and more people. But on top of that, there is legal risk potentially of maybe CNBC not expressing your words the most fairly. Matt Kohrs claims to open Texas Roadhouse with Riley Reid. May have ever seen Riley Reid video twice. Never heard talk about Matt. Weird. I don't know. Nielsen, I don't know what the GVO announcement is, but I could take a look at the chart. GVO looking weak. I think our solid entries are sub 6, maybe like between $5.75 and $6 if you like it, but I don't know what the announcement is. Where are we at? AMC is at just sub 42, 41.85. GME is 199. The S&P 500 and the Russell 2000. Russell 2000 is kind of holding up, but the S&P 500 looks pretty heavy to me. I don't know if I would be buying the S&P 500 dip at this moment in time. Hey, Matt, just tuned in. Not sure if you talked about it, but what's your take on Pyth putting a stock value at AMC of 700 plus per this last week while the other stocks were accurate on their value? I don't believe in that. You know, the price of AMC, it's $42. This concept of AMC trading at a different price on some other like secret entity, it is conspiracy theory bullshit with literally no evidence. The evidence of AMC and or GME trading at a different price, the evidence and the validity behind that is literally people saying, oh, trust me. That's it. It goes no. There is literally not a shred of evidence, and no person who has any true understanding of the market. There's no stock market professional ever who said, oh, yeah, there's a chance that it could trade at a different price. There's no agreement, and the only evidence of it are people creating videos saying, yeah, trust me. Like, that's it. That's it. That's truly it. It blows my mind that people believe AMC is trading at a different secret price somewhere. Trust me. Just trust me. Someone said, actually false. Seen plenty of DD. You have not. I am not mistaken. I am so insanely confident about this. I would literally bet my entire AMC and GME position together, multiplied by 10, that there's not some secret price somewhere trading on some other, like, what, Illuminati stock market that, like, no, it makes no sense. It's crazy. just trust me. Just trust me. No, I'm not going to just trust you. Oh, man. TMC, 3.2 million shares shorted, only 2 million free float. The rest of the shares are locked up. I'm not in love with TMC's chart, and I also don't know if TMC is even on the threshold list. What are your thoughts on LKCO? They recently had talks of a partnership with Microsoft for autonomous driving services. Thanks in advance, LKCO. Looks not good. Not looking the best. It's at support, so you'd want it to pull a U-turn pretty quickly. It looks like it's heading down to $1.90. If I had to trade LKCO right now, like, I'm not going to, and I don't think it's a good setup for any directional trade, but I would favor the bears. I would favor betting against LKCO at the moment in time. Especially, it looks like it's a Chinese stock, potentially an ADS. And if so, I mean, China's having some issues right now, folks. Matt, watch The Platform on Netflix. Good horror film that is a metaphor for apes and the hedge funds capitalism. It's insane. At least watch the trailer. Yeah, Andrew, that's the one where, like, the food gets lowered from level to level to level, and it just, like, is I don't know, an artistic take on, I guess, greed. What are your thoughts on uranium stock, DNN? So there's a lot of uranium stocks that have been doing well, and now they're taking a breather. So DNN ran from $1 all the way up to $1.80. CCJ, it ran from sub 16 all the way up to 26. What else do we have? U cubed. All of these. I think they just need to take like, all of them ran so much. I think they take more of a breather for sure. And then if they start to base and turn around, well, if you don't have uranium already, well, maybe that's an opportunity to get in. But it just ran so much. I think it needs to take a breather. Not true. I traded a share of AMC to my buddy for Mike for 69. So where do I send the info to get your portfolio, kind sir? You traded it to a buddy. We're talking about an exchange. There's no secret exchange. But I like how you're thinking about it, Justin. Very creative. But it's not a chart/technical play. You need to look into it. But I'm inherently a chart technical trading. That's where I feel comfortable with. So like, I'm not going to break my own rules to get into a trade that I'm not the biggest fan of. All right. Oh, shoot. It is past 11 already. Folks, that's it for the morning session. AMC, I like this recovery coming back up to 42. Let's see for that to push. IWM currently pushing. S&P 500 currently pushing. Hey, like today, I'm expecting higher volatility in the market in general. I will be back at 2 p.m. Eastern. If something insane happens, I'll start streaming even earlier. But I want to do some more research on this Evergrande thing myself. And I want to hang out with some of the people in the Discord and talk about what's going on. So I'll be back 2 p.m. Eastern at the latest. If something crazy happens, I will be on before. But thanks for hanging out with me this morning. I appreciate all the support. And as always, from me and Chair, best of luck in the markets.